In a year where a lot of the market was pretty shaky, one firm on Wall Street didn't just get by, it absolutely soared. We're talking about Morgan Stanley's incredible 2025. So the big question is, how on earth did they pull it off? Well, let's get into it and break down their playbook.
Okay, first, just look at this number. Let it sink in. That's almost $9.3 trillion. To put that in perspective, that's bigger than the entire economy of most countries on Earth. It's the huge mountain of client assets that Morgan Stanley is now managing, and it's really the bedrock of their entire success story.
So how do you even build a financial empire like that, especially while so many others were struggling? Well, I can tell you it wasn't by accident. It was all about a very deliberate and, frankly, brilliantly executed strategy that we're about to unpack right now.
And it all really starts with what they call their two-pillar strategy, which is just a masterclass in creating financial balance.
At the very heart of their whole approach is this idea they call the integrated firm strategy. Now, I know it might sound like some corporate buzzword, but the way they put it into practice is what's so powerful. It's the real engine behind their stability and their growth.
Think about it this way. On one side, you've got institutional securities. This is like the fast, high-stakes speedboat of investment banking. It's exciting, deal-driven, but it can get tossed around in choppy waters. And on the other side, you have this absolute aircraft carrier, wealth management. It's just this massive, steady engine that keeps compounding year after year, driven by all those trillions in client assets. And the result? Just look at this. It's a near-perfect balance in their 2025 revenue. You've got institutional securities and wealth management, each bringing in right around 45% of the total. And that's not a coincidence. It's completely by design. That steady, predictable income from wealth management acts like this incredible shock absorber for the wild swings you can get from investment banking.
Okay, so a balanced strategy is one thing. But does it actually make money? Is it profitable? Well, the proof is really in one key number that shows this model isn't just stable, it's an absolute profit-generating machine.
So to really get their profitability, you need to know this one acronym, ROTCE. It stands for Return on Tangible Common Equity. The easiest way to think about it is like a car's fuel efficiency. It's miles per gallon. It just measures how much profit a bank makes for every single dollar of shareholder money it uses. So a higher ROTCE means you've got a way more efficient, way more profitable engine.
And their ROCTE in 2025? An unbelievable 21.6%. Let me put that into context for you. Their own long-term, super ambitious goal was 20%. They didn't just hit that target, they completely smashed right through it. This is the definitive proof that their balanced strategy is a total powerhouse when it comes to profits.
And this profitability wasn't just in one little corner of the business. Nope, total revenue shot up 14% to over $70 billion. And as you can see, that growth came from both pillars, a really strong showing in institutional securities and that steady, reliable climb in wealth management. The whole engine was just firing on all cylinders.
So, what were the gears actually turning this whole machine? Well, they pulled in a massive $356 billion in new assets. They got way more efficient, meaning they spent less to earn more. And the bottom line of all this? Net income skyrocketed by 26% to almost $17 billion. Just incredible numbers.
Okay, so that's the story of Morgan Stanley's 2025. But what does it mean for the rest of us for the broader market? Well, buried inside their success story is a pretty interesting clue about where everything could be headed in 2026.
If you dig into their report, there's a really interesting tidbit. Check out the rebound in mergers and acquisitions activity, or M&A. The value of completed deals jumped from $655 billion to $756 billion. In just 1 year, that's a huge leap.
So why should you care about that? Well, because M&A activity is one of the best barometers we have for corporate confidence. Think about it. Companies don't go out and make billion-dollar acquisitions unless they're feeling pretty darn good about the future. So this surge in deal-making is a really powerful signal of optimism, and it might just be the first sign of a broader market recovery coming in 2026.
An analysis from HDIN Research really put it perfectly. They called this a harvest period for the firm's strategy. All those years of careful planning, of strategic moves, are now really starting to pay off, not just for Morgan Stanley, but maybe for the entire market.
All right, so let's boil this all down. What's the main takeaway from all this? And more importantly, what's coming next?
It really comes down to a simple three-step winning formula. Step 1, create that incredible balance with the integrated firm model. Step 2, turn that balance into an absolute profit machine, which is proven by that 21.6% ROTCE. And step 3, use their unique position as a market bellwether, where that big rebound in M&A points to a more optimistic outlook for everyone.
But here's the thing. They're not just sitting back and counting their money. Their next big move is a major push into technology and specifically generative AI. They see this as the key to unlocking a whole new level of efficiency and growth.
And that really leaves us with one final, fascinating question to think about. For years, Morgan Stanley absolutely perfected this model of balancing these huge, human-driven businesses. So now, as artificial intelligence starts to fundamentally reshape the entire world of finance, could this perfectly balanced fortress be ready to become even more dominant than it already is?
Now, our breakdown today was based on a really comprehensive analysis by HDIN Research. If you want to go even deeper and see all the data, you can find their full 20-page consulting deck over at hdnresearch.com. Thanks so much for tuning in.